I want to welcome John Miniotis, the CEO of AbraSilver, which is doing really well over the last year. It's up over 150% in the last 12 months, I think. So welcome, John.
Hi, Elliot. Thanks very much for having me. It's my pleasure.
I always like to ask this, why are you in the silver business to begin with? Why are you bullish on silver?
Sure. No, so I'd say, in my honest opinion, silver has among the best fundamentals, I'd say, of any commodity out there right now. And it's also one of the most undervalued assets in the world, I'd say, as well. So a number of factors. So first, on the demand side, I guess because of its unique characteristic, silver has a pretty powerful 1-2 punch, which is, again, not being reflected in the current market price. So on the one side, you have industrial demand rising. So I think we all know silver's a conductor of electricity and heat. And so it's used in the digital and sort of green technologies all around us. And those, of course, are expanding by the day. So whether that's solar panels, electric vehicles, all your electrical components that are essential for sort of the new economy. Clearly, the demand for that continues to rise. And then on the other side, you have investment demand, which is pretty much off the charts right now. So at all-time record highs. And so as you see inflation rising, you see interest rates being held at ridiculously low levels. Investors are looking for safe assets and turning to assets that will retain their value throughout time. And so turning to hard assets like gold, like silver to protect their wealth. And so, that's why I'd say I'm bullish on silver. The demand outlook looks great. But then what I focus mostly on is on the supply side. And of course, being sort of running a silver exploration company, that's what matters most to us. And I guess silver's really, it's a depleting asset. The big silver deposits held by majors were found decades ago. There's really no new giant deposits at all coming online. I'd say there are, as far as I'm aware, 0 major silver projects in construction right now. I think the last major silver mine to enter production was, it's called Penasquito. That entered production, I believe, back in 2010. That was by Goldcorp at that time. So that's 11 years ago now. So right now, a high scarcity for new, sort of advanced, larger scale silver projects out there. Each year there's about, I guess in 2020, I think there was about a 250 million ounce deficit. And so just to put that in context, so a company of our size, we have quite a large silver project. It's called Diablilos. It's in exploration right now, so it's not producing. But once it's producing, it'd be about 8 million ounces a year, say. So with a deficit of, call it 240 million ounces, you'd need 30 projects the size of Diablilos to enter production in order to balance the market. And of course, there are not 30 projects like ours globally at all in the world, not even close. So unless we start mining a different planet, I don't see where all this silver is going to come from to kind of balance things. So from a fundamental point of view, silver's in an incredible position at this time. And, we're very keen to have an exciting project that we're moving forward as we see there's blue skies ahead for really the silver prices.
So you're saying that there is a deficit right now in silver. There's a shortage how far out do you think that's projected? Because my question would be, how soon can all the supply get back online to close the gap?
Yeah. So on the demand side, on the investment side, as long as interest rates stay at ridiculously low levels, and inflation is now rising, so that makes your negative, your real interest rates are negative, and so more and more investors are flocking towards safe haven assets such as gold and silver, and a number of other assets. Of course, obviously, real estate markets at all-time highs, stock markets at all-time highs. People are looking to park their money in something that's going to give them a return. So I don't see that slowing down anytime. Really, the central banks are trapped. As far as I'm concerned, in terms of not being able to raise rates, so they won't be able to combat inflation, really. So we don't see that turning around. Again, with the Green New Deal, electric vehicles, the demand for, all of that is continuing to rise as well. So from the demand side, I don't see that decreasing anytime soon. And on the supply side, I mean, it takes multiple years to get a project permitted, enter construction, through production. So you have a clear sense within the next 5 years, there's only a number of projects that are really going to enter production that can make a material difference. And again, those could be 8 million ounce a year is on the high end of the scale, I'd say. Most projects entering production within the next 5 years will be lower than that. So there's not going to be much supply that's going to catch up with demand. And so, yeah, ultimately, it's going to result in higher prices down the road. They'll incentivize a lot more production as well, more recycling, et cetera. But yeah, it takes, it's a number of years. And that's why typically bull markets for precious metals last between 5 to 10 years, I'd say. And so we might be in the very, very early innings of this next bull market. And, I'd say the outlook for the next several years is very bullish in my view, for sure.
So you see a multi-year supply crunch, and it's almost guaranteed. Well, as long as investment demand stays high, which we all know the fundamentals are very strong for that, you really can project a multi-year supply crunch.
Without question. Yeah. Wow. Yeah. I mean, you can't just start producing 100 million ounces of silver out of nowhere. And so, yeah, I'd say it's almost inevitable at this stage. I mean, I think it is inevitable.
In order for, the mines to come back online, the investment demand and the capital needed to produce, all the, infrastructure to mine out all the silver to fill the gap, what spot price do you think is reasonable to incentivize all that production?
Yeah, so it definitely varies. So there's a few projects like the one we have, which are highly economic, even at current commodity prices. Even our project has cash costs, Diablilos, it has cash costs of only $7.50 an ounce on a silver equivalent basis. Wow. So even at $15 silver, say, our project's still economic, still generates a good positive rate of return. That's great. Pretty unique though, I'd say. But there are other projects out there, much higher cash costs. You'd need above $30 silver for sure, I'd say, to incentivize much lower grade projects into coming into production. And the reality is a lot of silver, production comes really from byproduct credits. So it's not even a primary silver mine. So normally you'll have a gold mine generating silver as a byproduct. So even if silver prices spike, you're not really going to expand that project unless the other commodities are also in the bull market. And so you have silver generally comes with copper, with zinc, with lead, and with gold. And so you probably have to see a number of metals increase significantly higher than current prices to incentivize significant silver expansions out there. And that's why, again, that's another reason why silver is so unique is the majority of silver produced does not come from primary silver mines. It comes as a byproduct of other minerals. So, copper and zinc being very, very important for sure. But yeah, no, at Abra, so it's a silver and gold project that we have. And there's actually a base metal component sort of deeper down that we haven't really explored yet. For me, it wasn't a matter of, I looked at this project. We were looking for really high quality projects globally. I was a bit agnostic, whether it was copper or silver or gold. Any of those commodities I think are quite bullish. But we found sort of a high quality project in a great mining jurisdiction, very much undervalued. And that's really what attracted me to the asset. And it happened to be silver and gold focused.
So you can play the silver market many ways. You can buy an ETF, you can buy the physical, or you can buy a miner, right? Explorer, producer. Why should investors look for exploration companies in the silver space? So
it's a great question, and it's not for everyone, I'd say. So it really depends on your risk sort of tolerance level, risk profile. And so I think the safest thing to do if you're just looking, to park money is buy gold bars, buy silver bars. I mean, and as silver price rises, it's a one-to-one. If silver price rises 10%, 20% in a year, you make 20% from your silver bar. So that's sort of lowest torque, lowest sort of risk profile, but certainly also the lowest reward. Now, for a company like us, where we're exploring for silver, exploring for gold, we're very much de-risked in that we already have a highly economic project. So we already have 80 million ounces of silver, 750,000 ounces of gold defined. So it's already an economic project. but we've been drilling and hitting very high grade intercepts here. So expanding that project significantly with highly economic new ounces that we expect to add. And so for investors, of course, we already have 80 million ounces. As the silver price rises, there's significant rise to the value of the asset we already have. But as we find more, let's say we double the size of the project over many years, you know, now we've just doubled the size of the project. Shareholder value has more than doubled, especially if silver prices go up as well. So there's just a lot more leverage. So you get prices rising, which lifts the value of the project. You get exploration upside potential, which is not being valued in our share price. And so again, that increases the value of the company going forward. And then ultimately, let's say if we get acquired down the road, a major company wants to buy us, they'd have to pay a significant premium to the current share price as well. And so then again, you get another bump up from that. So there's a lot more upside potential for sure. And, you know, as an example, I think you mentioned, I mean, we were up in 2020 for the year, we were up about 750% as a company. Whereas silver was probably up closer to 40%, say. So, you know, you get significant torque if you can find the right company that's actually growing the project, advancing it towards production, adding value for shareholders. It's not just one factor. It's not just silver prices rising. It's, you know, a multitude. And you get sort of that excellent torque because of the scarcity value, because there are so few highly economic silver projects out there. I think the ones that do exist tend to, over time, trade at a premium to NAV as well. So that's another thing. You can re-rate just, you know, as more investors look to invest in companies like ourselves, you tend to trade at a higher multiple. So even that helps increase shareholder value.
Absolutely.
So it's a different sort of, I guess, investment opportunity for sure. It's not for everyone. But, you know, I think it's as a portion of your portfolio, if you're looking and buying physical silver, you know, then you should also sort of consider whether it's silver miners or silver exploration companies that already have a large resource, because you get much more upside for sure.
Yeah, got it. And talking about Abra, so yeah, you guys have proven resources in the ground. So that's just like a base floor of value. Then you're going to get a premium on the growth, the projected growth, which you have demonstrated. So could you just talk about, just give us a history, why has it run up so much? What has been the good news?
Yeah, so myself and my current team, we took over the company about a year and a half ago, so in January 2020. At that time, the company already had this large project called Diablilos. I mentioned 80 million ounces of silver, et cetera. But at that time, the former management team had completely run out of cash. So they weren't actively drilling. There was no real news flow. They had no way of moving the project forward. And so myself and my team, we were running another company. We merged the two together, took over as management. We raised some money out of the gate, started drilling. So this became from an inactive project just sitting around to now very much an active project. And right from the onset, from the very first drill hole, you know, throughout for the past year and a half now, we've been consistently hitting high-grade results, high-grade drill results over significant widths, over world-class widths. And so we've demonstrated this project has significant expansion potential, which was not being priced in previously. And I guess, in fact, I think out of the top 4 drill holes globally, we have the top 2 of the top 4. So I think we have the number 1 drill hole in the world and the number 4 hole as well. So we have 2 of the top 4 intercepts globally on a silver equivalent basis, and that's measured by the grades you're intersecting over the widths. So yeah, our exploration team has done a phenomenal job for us, consistently hitting very high grade material over incredible widths, close to surface, in oxides. So there's really not much more you can ask for an exploration company. So we've really come a long way. And so, you know, we were extremely undervalued. The thing is, we still continue to be very much undervalued, just given all the results we've been encountering. And so, you know, I think it's going to be an important second half to the year for sure for us, as all these pieces are going to come together. We're going to announce an updated resource, announce an updated economic study. So lots of catalysts, and of course we're still drilling. So looking to continue to add to this pretty unique project that we have.
Yeah, no, it seems like you've hit pay dirt essentially, and if you're continuing to mine out that pay dirt, then the story should technically get better and better, assuming that the proximity to the successful areas you've already found will yield more results. So my question is just digging into kind of those resources a little more. Where are they? Where are your resources located?
So our key project is called Diablilos. It's in a very mining-friendly province in Argentina. It's called the Salta province. Salta is very well known for lithium mining. There's also a big gold mine owned by Fortuna Silver, about 100 kilometers away for us. So it's very much a mining-friendly province. And it's all in one ore body called Oculto. And now this project, it's not producing at the moment. It's still an exploration project, so we're still actively looking to grow it. But it's open pittable. The resource is located very close to surface, which is absolutely ideal. It's for sure the cheapest mining method. It's within oxides, which again is ideal because it's the lowest cost. It's an agitated leaching process, and that's why our cash costs are going to be within the lowest quartile. So very, very high margins here. So it's in a mining friendly part of the world. Good infrastructure is in place because of lithium operations nearby us. I think we're extremely fortunate to have 100% ownership of this pretty unique project.
So just thinking about that project, yeah. So you guys are in the exploration phase still, right? And so,
correct.
What is the plan? Are you going to turn it into a producer? Are you going to get acquired? What's the plan?
Yeah, so we're still drilling. So we've completed our phase 1 drill program, which was about 50 holes that we drilled over the past year and a half. 90% of those intersected grades above our current resource grade. And so next month, we'll be coming out in August with an updated resource statement. So that'll be a big milestone for us. And then on the back of that, we'll come up with an updated preliminary economic study, which will show the updated economics. So last time the economics of this project were updated was back in 2018. So it's been 3 years now. A lot's changed. Obviously, we found all these high-grade results everywhere. So that's going to be coming out shortly within the next few months here. And then after that, we'll look to take it to the next phase, which would be the feasibility study phase. And that's where you do detailed engineering, you get your permits in place, which will be needed for construction, et cetera. And so we expect to go straight to a feasibility study, and likely that will all be completed by the end of, say, 2022. And then we'd also have permits in place to start construction. And so an important decision point will be for us in about a year and a half's time from now, in early 2023. That's when this project will be ready for construction. And then it'll be a $300 million capital cost. So pretty sizable capital cost. Now, whether we decide to build that ourselves or look to sell it, sell the company, sell the asset, partner with someone, that's remains to be seen. I don't have a crystal ball, so we'll see. But a lot of options available to us for sure, and we'll just do what maximizes shareholder value. And so whatever is going to result in the highest return for our shareholders on a risk-adjusted basis, I think that's a path we'll look to take at that time.
So let's say it costs $300 million. What kind of ROI would you expect in terms of like revenue from that?
Yeah, so that's the thing. So based on the 2018 study, so that doesn't include any of the existing resources that are, the drill results that we've going to be updating now in terms of the new resource. So based on the 2018 study, which is clearly improved at close to current commodity prices, so I think it's at $28 silver, $1,900 gold. The project has a 54% after-tax rate of return. So the after-tax net present value of this project is about $730 million Canadian. Now, based on that old resource. And so, of course, we're going to be updating that economic study shortly. So we'll have updated numbers. We expect, of course, it's going to be an improvement. But yeah, it's $730 million is your discounted cash flow, which would be about $1.66 per share. And we're currently trading at about 55 cents per share. So we're trading at 1/3 of the value of this project. And so that's what I was saying before. I mean, some of the ways you add value, just by re-rating I mean, sometimes you just don't even have to increase the net asset value of your project. It's just that the market understands this is a unique asset, and so you trade much closer to that $1.66, value per share. And so, there's significant upside potential ahead of us for sure, and we're very keen to unlock that for shareholders.
Great. And getting capital for the $300 million investment shouldn't be difficult, right? Given that insanely good return.
Exactly. There's a number of ways. So you could, of course, look to issue equity. You can do project financing. We have a large gold component as well. So currently it's about 60% silver, 40% gold. So if needed, we could consider, you can stream the gold and get money in that way. So there's various ways of financing, but we're not looking at all. We're fully funded for the exploration activities and to deliver the feasibility study. So we're cashed up. We have over $20 million of cash in the bank as of today. And so that'll last us all of this year, all of next year. And then when we get to that construction decision stage, that's when we're going to have to figure out, do we look to finance this ourselves and build it, or do we, evaluate other options?
Yeah, that was my next question, actually, how much runway you have. So you have enough cash to get you through this year and next year.
Right.
And so pretty much up to the decision point, right, of when you're going to raise capital to start investing.
Up to the construction decision point, correct?
Yeah, and that'll fund all the drilling programs over the next year and a half?
Yes, everything. Yep.
And how about debt?
Funded. We have no debt. So there's one $7 million payment that's due to the previous owner of the project, but that's due in 2025. So we have 4 years, and then that can be paid back in 2025. It'll be a $7 million US payment. It's not technically debt. It's like an option payment, but it's not on our balance sheet. But yeah, we have that payment, but that would be part of the CapEx. So when you're looking to build the project, clearly by that stage, it's going to be a construction ready project. With a $300 million build, you'll factor in that $7 million payment as well and say, it'll cost $307 million total.
Sure. Yeah. No, it sounds really pretty exciting, because over the next year and a half, the news is likely to just get better and better, right? And that will raise the value, and you have enough cash to get there. And then, yeah, and you already have proven a good ROI on the asset. So it sounds pretty interesting.
Yeah, no, we're extremely excited. Like I say, I think there's some important catalysts coming up here over even the next few months.
Yeah.
Just coming out with that updated resource, coming out with the updated economic study, continuing to come out with updated drill results. So we're continuing to drill, of course. We have 2 rigs at site. So continuing news flow from the exploration side. But that will all help, I think, bring the value to the forefront, where we can update the economics of this project and just show that this is, I think, without question, a very unique project. It's likely, I'd say, one of the highest margin open pitable primary silver projects globally.
Yeah, and you don't have any big concerns about jurisdictional risk in Argentina?
So in Argentina, like I said, so it really depends on which province you're in. So there are some provinces, so the provinces own the mineral rights, they have their own set of mining legislations. And so there's some provinces in Argentina where we would not want to be operating for sure. They're quite anti-mining. But on the complete opposite end of the spectrum, you have Salta, which is, I think, without question, regarded as the most mining-friendly province in all of Argentina. In fact, I think by the Fraser Institute, which conducts annual surveys on political risk sort of mining jurisdictions, Salta was ranked as the #1 jurisdiction in all of Latin America. So ahead of Chile for the first time ever, ahead of Peru, well ahead of Mexico. And so Salta already has established lithium operations. Those are our neighbors, are all lithium projects, lithium mines. Like I said, Fortuna has completed construction of a large gold project there. They spent $320 million building that. That was constructed in 2020. One of our neighbors, POSCO, is now spending $450 million sort of in bringing up their lithium operation into full production. So there's, without question, I think Salta's been attracting foreign capital. And there's a number of incentives in places, tax incentives, et cetera. It's a very, very favorable mining jurisdiction, without question.
Very cool. Well, thanks so much. Where can people go to learn more?
Yeah, no, check out our website for sure. So AbraSilver.com. And then you can email us as well if you have any questions. Just info@AbraSilver.com. And then, yeah, we get back to people if they have any questions. I'm always happy to have a call with any investor or prospective investor.
This discussion is for informational purposes only. Nothing in this discussion should be taken as investment advice. Guests are not compensated for their appearance. Do not base any investment decisions on the information presented.